Hey everyone, welcome to The Explainer. I am so incredibly pumped you're joining us today, because we're tackling one of the most debated, highly scrutinized topics in the entire financial world right now: where exactly Bitcoin is heading by the end of 2026. But look, we're not just staring at charts and making random guesses today. We're going to examine the macroeconomic weather conditions that are literally going to dictate its realistic price. We'll lay out the exact triggers and dig into the actual institutional forecasts based on where the global economy is heading. Okay, let's dive into this. Today, we're mapping the future by climbing a ladder of scenarios. We'll start with the bear case, move up to the realistic base case, check out the bull case, touch on the extreme bull wild card, and finally, figure out which reality actually wins out.
Mapping the future, setting the stage.
The bear case scenario: when macro goes bad. Look, the very first thing to grasp right out of the gate is that Bitcoin's future isn't just some isolated guess anymore. It is inextricably linked to the broader global economy. Its destination depends heavily on four very distinct, mutually exclusive macroeconomic realities. Basically, to understand the price, we have to understand the environment it lives in. So what actually triggers this first scenario, our red alert macro storm? Well, the massive headwinds here are a looming global recession and persistently high interest rates. When interest rates stay high, borrowing money gets super expensive. Businesses pull back, consumers tighten their belts, and the whole economy slows down. And in that environment, everyday retail investors simply don't have the disposable income to pour into assets like Bitcoin, and institutional money tends to look for safer yields elsewhere. It creates what we call a risk-off environment. Let's break that term down because it's absolutely crucial for understanding the bear case. A risk-off environment is essentially a market condition where economic uncertainty completely spooks investors. It pushes them to avoid volatile assets, crypto, high-growth tech stocks, and instead they move their capital to traditional, predictable safe havens like government bonds or cash. The entire psychology here is preservation, not growth. Capital actively flees away from Bitcoin in this scenario.
And that brings us to the downside forecast, $60,000 to $90,000 by the end of 2026. Now, what's really interesting here is that even in the absolute worst-case scenario, recessions, risk-off panic, the whole shebang, this actually lines up with current downside institutional forecasts. It represents a surprisingly robust floor, especially when you remember that just a few cycles ago, a bear market literally meant Bitcoin shedding 80% of its value in a matter of months. So this tells us the asset has matured big time, even when the macro weather is absolutely terrible.
The realistic base case, the most likely pack. Okay, let's bring the energy back up to a nice steady hum here. This is our yellow, clear skies scenario. It's not a raging storm, but hey, it's not a rocket ship either. The defining characteristics here are steady ETF inflows, meaning Wall Street continues to casually, consistently allocate a percentage of their portfolios into Bitcoin via ETFs month after month. Crucially, there are no major macro shocks, no massive recessions, no sudden inflationary spikes. Because of this institutional presence and the lack of chaos, we experience a slower, much more mature cycle. Less volatility, more steady compounding growth. So the crucial point is that this stable environment leads us to a target of $120,000 up to $170,000. This is exactly where a vast majority of institutional forecasts are sitting right now for the end of 2026. It reflects a world where Bitcoin just quietly does its job, slowly absorbing global wealth as a recognized mainstream asset class. No catastrophic global event required to drive adoption.
The bull case scenario, when everything clicks. I want you to really imagine an environment where absolutely everything aligns perfectly. This is the green scenario, where those macroeconomic headwinds completely flip into massive, powerful tailwinds. Let's see how this builds, right? If our base case is just quiet and steady, what does the bull case look like? How do we jump to high-octane growth? Well, it requires central banks coming in with aggressive rate cuts. Cheaper money leads to a massive liquidity surge in the global economy. That extra cash drives massive, accelerated ETF demand. And once that price really starts aggressively moving up, retail FOMO, the fear of missing out, officially returns to the market, basically pouring fuel on the fire. When you combine a liquidity surge with serious retail FOMO, you get these numbers: $180,000 to $250,000. These are your upper-end analyst predictions for 2026. When fiat currency becomes incredibly cheap to borrow, investors aggressively seek out finite, scarce assets to protect their purchasing power. I mean, you can't exactly print more Bitcoin at the Federal Reserve, right? A massive liquidity surge makes these staggering numbers structurally totally possible.
Extreme bull, low probability, the wild card. Okay, this scenario requires a certain level of awe to even discuss. If the previous scenario was a tailwind, this is strapping Bitcoin to a literal rocket engine. This scenario is born out of a paradoxical perfect storm. The triggers here aren't just friendly rate cuts. We are talking about a severe global monetary crisis. We're talking about a total loss of faith in major fiat currencies and skyrocketing, uncontrollable inflation. In this extreme environment, the world is practically forced into a paradigm shift, abandoning traditional currency models and treating Bitcoin entirely as a digital gold reserve, a true global safe haven against systemic collapse. And the outcome of that global shift? Prices at $250,000 and well above. Now, it is my job to responsibly add a massive caveat here. While this is mathematically and theoretically possible, market pricing right now gives this extreme outcome very, very low odds. It is undeniably a fascinating wildcard to keep in the back of your mind, for sure, but it is certainly not the base case scenario that you should be planning your everyday finances around.
Which reality wins out? Finding perspective.
Let's bring ourselves back down to earth from that extreme wildcard. We've claimed the whole ladder today, from the $60,000 storm up to the $250,000 rocket ship. Now we need to analyze the big picture to make sense of all these numbers. I want you to pause for a second and really consider this. Which reality is the market actually pricing in? Based on everything we just learned, which of these macro weather conditions are we genuinely trending toward right now? Are we seeing signs of a deep recession, or are we seeing steady, quiet adoption? Because your answer to that question dictates your personal forecast. And this brilliantly illustrates exactly why we have to pay attention to the macro. I mean, think about the sheer scale of the variance we're talking about here. We are looking at a spread between a $90,000 high in a bear market all the way up to a $250,000 high in a bull market. The asset is exactly the same in all three scenarios. The only thing that changes is the global economy around it. It just proves how heavily macro conditions manipulate the ultimate price. If you take away just one thing from this explainer today, let it be this. The macro weather dictates the destination. Bitcoin's outcome at the end of 2026 is entirely dependent on these unfolding global economic conditions. Interest rates, liquidity, recession fears, rather than just isolated internal crypto trends. It's a macroeconomic asset now, and it's gonna behave like one. I'll leave you with this final, provocative thought to consider today. If the widely accepted institutional base case is sitting right there at a staggering $120,000 to $170,000, are you preparing your own portfolio for clear skies, or are you looking at the horizon and bracing for a macro storm? Keep a close eye on those interest rates and inflation reports because they are literally writing the future of this asset in real time. Thank you so much for joining me to break this down today, and keep learning. Hey,